it's a crazy day today. Like the massive
Yeah.
jump.
Yeah, but the thing, I'm glad the VIX didn't go up too much. The VIX was coming down slowly, so that's a good sign too.
Yeah, well, yeah, I'm watching VIX at like I wanted to drop below 30 to like actually start
Yeah,
like adding
still,
something,
yeah,
but let's see what happens. Like yeah, like it's insane, man. Like the last time we were talking, and like within 2 weeks, things have changed. In my
yeah,
opinion, drastically, and what happens next is anyone's guess. And like the outlook is getting as foggy as it could get.
yeah.
So it's very interesting how the market is reacting to all of this, and maybe I am just too pessimistic all of a sudden. But
All of a sudden?
yeah, well, I mean, I wasn't. I've been pessimistic for a bit, but but like now it's just like now I'm thinking, okay, so what happens to all the people who were highly leveraged? What happens to all the people who were like like there were a lot of people buying debt that was not that great. Like the high yields bonds. They actually the high yield bond issuance shot through the roof in 2019 and 2018.
Yeah.
What happens to all these guys who held this? Because I was actually talking to a few fund managers last year, and they were saying, "Oh, we're buying bonds for the what do you call it? Geez, what was that word? And not for the coupon or anything. They're buying bonds for capital gain, which is crazy in my opinion. Like, why would you like a bond you buy for coupon and income, and
Yeah.
People invest in the negative yielding savings, right? It's just banking on the trend, not as much to
not so that was just like, whoa, you're buying bonds on that, and that was eye opening. But I guess
yeah. So a couple questions. Nishit, is your camera going to be on? Should we wait for that so that we know who you are?
Hey, Nishit.
Oh, I think he's in the middle of something, so he's just listening.
Okay, cool. Okay, so quick question, guys. We're going to get started now. It's a 40-minute time limit, also because it's a free account, but also because I think it's a good time because people can go on for like an hour and a half or something, but it's a good use if everybody's structured, Does anybody care about this call being recorded?
Not at all.
No, I don't care.
Okay. So I'm thinking if this goes really well and if this is a weekly thing, we can put it out on YouTube and see what people think about it. If anybody has any, let me know. Hello, Stephanie. Stephanie is interested in the topic a lot. She'll be listening in, but also if you have any topics, inputs, let us know. Okay?
Awesome.
Can you hear us?
I think she's on mute.
I'm going to unmute everybody.
No, you can't do that.
Okay, you can hear us. Okay, cool. Awesome. So we have 35 minutes, so let's go quick. We're gonna take rounds and have prompts. So I'm just moderating it, but everybody can submit in the chat whatever prompts they want everybody to cover, and we'll go round by round. If nobody submits, I have some prompts, but write in the chat anything you want everybody to discuss about. So let's start with, not medically, but for the markets, do you think the worst is over? We'll go in the order of Panda, Mo, myself, and Stephanie.
Yeah, I don't think we're going to go back to the same low we saw when the Dow almost went to 19,000. I don't think it's going to happen again.
Should we go straight back up, or do you think there will still be a dip, but not that bad?
There might be a dip, but not that bad.
Okay. Mo?
I am cautiously optimistic. This word has been been thrown around all over the place. I have a feeling if we're in the real bear market and if we're heading towards a very bad situation down the road, this should be like bear market usually have three phases. First phase is the initial punch. You get that. We got that out of the way really quickly. Now we see a couple of months of just making sure everyone feels like, oh, it's great and things are going well, and then the final punch comes in. When does that come in? And I have a very strong feeling we go test those lows that happened a few weeks. Is it a few weeks now? A few weeks ago. so yeah, that's where I stand right now. But I am cautious. It's not like I'm not buying or I'm not trading. I am trading. but with very tight stops and watching every single thing very carefully.
Frankly, I expected you to be more negative than that. I thought you would be like, we'll punch through all the holes. So,
You know, so S&P 500, I am actually looking at 1575. That's way down the way down there. So let's see.
okay, there you go. So before I start, Nishit has something to say. I think he's in the opinion of an L-shaped recovery. L-shaped means like so flat a recovery that it takes very, very long. But I think that's his opinion. If you change, it's not what you meant, Nishit, let us know. My take is, again, things will go bad again. Technically also, we're not that strong right now. And the bad news, like every day we hear press conferences, one day is good, one day is bad, one day is good, one day is bad. It's not a trend in terms of the numbers. Yesterday we had a really good day in New York City in terms of what we saw in new hospitalizations, but is that a trend? We don't know. And I think there's potential to go down again. Maybe not that bad, but or not that sudden, but gradual and slow and time-based fall till things come back again. Stephanie, what do you think? Is the worst over?
Okay, give me 1 minute. I'll just put a chip in my mouth.
Sounds like worst is not done
Oh,
yet.
Mark is with me too, and he'd be happy to chime in as well.
You both.
I'm gonna be honest. I haven't been monitoring anything, tracking anything. I think we've talked about it a little bit in terms of what we imagine to be the next steps. However, I think without really being immersed in the S&P and knowing what's going on right now, I don't think we can give like an accurate evaluation. So I'm pleading the fifth.
What do you say medically? Any opinions?
Mark, what do you think?
I also ate a chip, so hold on.
They do a good cook show, a cookout show. Every night they put out a new item on Instagram and how to cook recipe step by step. So they're busy consuming some new recipe.
Part of our practice, part of our training for the show is eating chips.
I think some arenas are going to thrive. You know, what we've seen is that people are much more dependent on delivery services, things that are on demand. You know, things even ranging from like PPE, you know, I think it brought a lot to light, and it's teaching people how to work in a different way. I think we've been accustomed to working face to face, and now there's like this transition to working virtually. So whether that's important or not is, I think, the point is that it is giving us the skills to adapt a little bit more. And through that adaptation, I see this period as an incubator for innovation. You know, how many things that first were face-to-face now transition to the virtual realm? How many things did we assume had to be face-to-face? And then it's opened our eyes how we don't necessarily need it to be that way. So I think it's just conceptually, it's shifting the way we perceive services. What do we see as essential? What is essential? I don't know. But right now, it's inviting us to ask that question as to what we think is important to thrive. And I think it speaks volumes, the fact that Amazon, most recently I tried to buy groceries, and they're so overwhelmed that they're no longer accepting any any orders. So I don't know. These are just observations, stream of consciousness, but that's what I'm thinking right at this moment without being properly prepared for that question.
Mm-hmm. No, that's true. So, Mark, sorry, go ahead.
The podcast, and I think the biggest thing was uncertainty, and I think you were talking about that just now. I mean, there's the whole what are the medical restrictions that are put out there for the next 6 months? And then what is people's comfort level? Because even if all the restrictions were taken away, are people still going to want to go back to normal?
And that's something I've been questioning. Like, I will not travel for a little bit. I am not looking to travel or go to cruise or anything of that sort.
If you were going to cruise before, that's shame on you. Like,
No, I've never been, but like I'm just thinking, right?
So that actually gets us to a very good point of maybe a next round, which is which industries are not gonna, even if the markets had a V-shaped recovery, which industries will not have a V-shaped recovery? Because the market may have it, but some industries will be flawed for a long time. So I guess Stephanie wants to go first.
Oh, and I ate a chip again. I thought you were going to continue talking.
don't.
Here, talk for 2 more minutes.
Okay, so which industries, even though government says so, but they will be harmed because there is no consumer demand? I'll start. Sorry, go ahead, Stephanie.
Okay. So, so I follow Colleen Dillenschneider. I don't know if you know who she is. She has a website called Know Your Bone, and she does a lot of different types of like marketing analysis, and all of it is really data informed decision making, but it's mostly towards the arts and culture sector. And she recently rolled out this article. And again, as I said, it's based on data that she's pulled and a lot of market research. Said that spaces that are confined, such as like movie theaters or concert venues, or anywhere where you have to be groups of people together, they're going to take the longest to recover. Whereas, for example, public parks, botanic gardens, zoos that are outdoor spaces where people can walk at their leisure and still, even if they go to these public spaces, they can continue a 6 feet, distance. I think that's interesting how people are going to be navigating space in a different way. That was just something I read and I thought was very interesting.
I think the takeaway is like people are going to be more inclined to be outside versus inside or confined in spaces. So movie theaters or anything indoors is not as appealing as being outside in an open air environment. And so that might help inform a bit your question around what industry is not going to do well. Well, closed spaces like a cruise ship is not going to do well.
Exactly. That's what I was saying.
The ski resort's still good.
Probably much more on the likely side of the spectrum to do better.
What did you say?
Like a ski resort.
Oh, ski resort.
Okay, Panda, you go next.
What was the question again?
What industries, even if market comes back, what industries we should stay away from because of the social distancing guidelines that's gonna probably stay with us?
Oh man, I've dipped in every industry. I mean, like cruise line is the last one, but I still have cruise line stuff. But yeah, they might be the last one to recover. Because airlines, I mean, I know it's like confined space and everything, but people are still flying. Like basically what's going to happen is when people will start, businesses will be opening up and everything, people will take precautions, but they will fly. Like airlines make money from business class, and a lot of those, they are the biggest, like the chunk of money they can make from. Like Delta's biggest like money making is their business class and like everything like that. So I think a lot of people will be flying. So I think maybe not internationally because every country has their own restrictions, but domestic travel. But I think they will come later. But I think cruise lines will be way late. I don't know how oil is going to make, like how I don't know if oil is going to come back up very soon. Okay. With the talks and happening and everything, the demand is not even high either.
So just the cruise lines aren't coming back right now.
Yeah, that's what I'm thinking. Yeah.
Okay. I feel like restaurants and bars will suffer a lot more than we think, and theaters. So companies like AMC, who have just had theaters, stay away from them. Companies like Dave & Buster's, which thrive on like big groups coming together and playing, stay away from them. And yeah, anything that like requires proximity, those spaces like cruise lines, of course, stay away from them. But then otherwise, I feel most companies who have enterprise as final end customers will be better than consumer facing, because like if you're a cloud company and you're serving data analytics platform, I feel like that would be very safer than interacting directly with customers. And one of the weird things to say is one of the best companies of all time, Disney, I feel like is in 3 different sides hit very hard. Like One of it is the resorts and parks, which is a lot of people coming together. A lot of the business is ESPN, which is also a lot of people coming together for sports. And the only good part it has going on, and the movies, which is again a hit because people are not going to the theater. So it's good company with 3 areas, and all of the 3 verticals have like serious issues. The only saving grace is that it launched Disney Plus, which, so you may think of it as safe, but I would think it would not
Yeah.
work equally in a V-shaped recovery because all of the 3 sectors are very hit.
I think even in the restaurant, like companies like QSR and some other companies, that their bigger model is also into drive-through, because what's going to happen is a lot of mom and pop restaurants, if they are not connected with Uber Eats, they may not survive. So
Mhm.
when things will get better, people would like to be like, spend their money, splurge, go eat out. So a lot of times Domino's or QSR, like all these places, like they will be able to go drive through, and more people will go to that than staying inside. So I think restaurants will get affected, but depends. Like Chipotle might not. Chipotle is looking pretty good. So it depends.
Okay, Mo.
Oh, he's muted.
Can you guys hear me? Yes, you
Yeah.
there's few things that I think. So I totally agree with Stephanie and Sunny on the inside spaces, things like,
Sorry,
like
Panda, he
theater.
doesn't agree with you.
Well, it's perfectly fine. Like I mean, these things are going to, like, people have trust issues, like going to these spaces. Like I will have trust issue going to a theater for the next few months. Like that's how it is. I'd rather watch Netflix now than go to a theater.
Oh yeah.
Right. Other things that not too many people are paying attention to are the companies like Boeing, Airbus, and Bombardier. They make airplanes. Air travel has stopped. In the next 6 months, these guys, I don't think they're going to be delivering anything. And at the same time, they're using their credit lines to pay for things that they have going on right now. It'll be interesting to see how they turn out, and like how they play, are they going to be getting any orders? That's one question that I am asking. Other things are hotels. I think we didn't touch on it yet. Like hotels are in a pretty bad shape. The vacancy rate is not that great, and again, just like airlines and theaters, I'm not sure how many people are going to be looking to go to hotels. And at the same time, what I'm hearing a lot is like a bunch of hotels are turning into quarantine space, or hospitals are shifting their patients to hotels. That could be something like, now all of a sudden, if your hotel is that place where all the patients are going, what happens to you? Like, will people come to that hotel? And then, I don't know. I'm just thinking on those lines as well. Yeah, that's about it. I think hotels, airlines, plane makers, not airlines, they're going to get bailed out. I'm pretty convinced about that. They're going to be okay for a little bit. And yeah, restaurants, theaters, and things like that, I don't think they're coming back anytime soon. It's just going to be a while.
So I feel like we're all on the same page about what's not going to work. Let's talk about what we think is, based on this trend, is going to work. I guess, again, we should be on the same page. It's pretty obvious now, working from home and taking out and delivery. I guess we've also talked at the same time about what's working. So let's talk about one thing that you're positive or negative about, which is a surprise kind of thing, like not the obvious. So like I said, I was negative about Disney because of things that people may think it's still Disney, but it could be a lot negative. One positive that I haven't given a lot of thought about, I haven't even bought into it, is Kroger. So groceries are something that is, of course, like everywhere now. I haven't done my homework yet, but I was thinking which companies are pure play groceries. Walmart has a lot of grocery sales. Amazon has Whole Foods, but it's like a tiny part of the whole thing. What are the pure plays of grocery? Maybe like Super Value. I should look into. Haven't looked into it. It has probably a lot of debt. But Trader Joe's, it's not a private. It's a private company, but something like Kroger, which is a pure play grocery. And people, the more they learn to cook at home, they'll probably keep continuing to buy groceries more and cook at home versus going to necessarily a restaurant all the time. So go around, anybody who goes first, some surprising takes. That's not obvious.
I have a lot of stuff in Costco because when did I started when Kramer came on CNBC and he went that because Costco looks good, Walmart looks good, and Amazon. He came up like, I don't know, I mean, he's always like that blunt. He was like Walmart, Costco, and Amazon will be the only retail that will be left if this gets ugly.
Mm-hmm.
So I'm big on Costco.
But that's not surprising then, right? That's the
Yeah.
obvious one. No. Okay. Any negatives that are surprising that people are not looking into, but you have warnings for?
Yeah.
I feel like Mo will have great ones. He's such a big warning red flagger. Like, look into this. Nobody's paying attention to this. Look into this. I'm telling you guys. But Stephanie has a point before. Did you have to go first?
I need to think more about this. However, my initial thought is in terms of delivery services, things that like convenience services. So, for example, Instacart, any type of delivery type service, I think would be on the rise. I think we once you get accustomed to convenience, like Mark and I, we'd never bought our groceries online, and given this, like the circumstances, all of a sudden we started doing it. And I'm not going to say we'll stick with it, but it does make our life a lot easier. Scheduling it at a specific time when you make a specific list, I think that convenience is critical. So similar types of delivery services I think are going to thrive, but maybe focus on groceries. Maybe even GoPuff could have like an expansion. I don't know. What other things like that? Like DoorDash, Seamless.
And negative one? Something that is not obvious. Negative one, something that is not obvious. You don't have to have it. In case you have it. If
Mark,
not,
do you have a negative one? Hold on, wait a second. Mark's thinking of it. He's got it.
we can come back after Mo.
Yeah, I might go to Mo, but I think, yeah, what has opened my eyes the most recently is the lack of delivery services. That like we are running out of times for, specific time slots. So I think urgency creates need, creates demand. And I think that's what we're seeing is like, what do we need right now? Maybe cleaning supplies. I think people, when they're cautious, they might invest in more cleaning supplies. I don't know. That's stream of consciousness.
Okay. Mo, I'm expecting more of a negative surprises from you than positive, but let's see.
I guess I'm taking that spot of that that bear on the on any call, but I think I talked about it before as well. Watching silver very carefully, something nobody is watching. Nobody likes to talk about it. One of those metals that have done so poorly over the past few years that it's just ignored. It's going to surprise us because in the physical market especially, there is something happening where you see shortages all over the globe popping up, and like nobody, and not a lot is being done about it. So and given the situation we have at hand, this whole supply chain has kind of stalled. Like people are more focused on moving the essential goods than worry about things like copper, silver, things like that, platinum. So what's happening is you're getting these shortages. As soon as we get out of this, whenever this is over, what you're going to see is demand come up. You can see silver is essential for example, for tech, for solar, for a bunch of things. You're going to need that. And given what is happening now, like I have a feeling we see a shortage coming out of it. And that means really good prices.
So very quick, are you playing the SLV as a vehicle for?
I am anything you can imagine on silver. I am playing it. I've been buyer since the 1280. I've been buying like there is no tomorrow. I've built a sizable position. My risk on the downside is about 40%, which is crazy. Never speculate that much, people. And but on the upside, I think in the next 2 years, and this is another crazy estimate, we see a return of anywhere from 200% to about 400%.
What's the
What
best?
about gold?
Yeah, go ahead.
Sorry?
What about gold, like GLD?
So gold is an interesting play as well. Again, I think we're seeing a crazy money destruction event right now. Governments are spending, central banks are printing money like there's no tomorrow. Gold is a great hedge against devaluation, uncertainty, volatility, and I feel like we're gonna get somewhere with it. I see gold at 2,000 easily. I see gold ripping through 2,400 easily, but will I be wrong? I can be totally wrong, but at the same time, like if you're going to trade it, what you want to do is you want to make sure you have your stops there. So you take, like if things fall apart, you're able to get out before you lose everything. And that's how I look at things. Yeah.
Okay, so we have 11 minutes. I know of a final question that I want to ask, but before that, let's start with a prompt that Nishit gave us. What do you think about Uber and Lyft? Where do they go from here? And does the car buying trend reverse or get supported once everything gets started again? Anybody with any thoughts?
So we had a massive car buying happening because the car loans given out were, they were given out to anybody and everybody. So I have a feeling the banks and the automakers are going to pull back a little bit. They're going to see, like, they're going to go for quality buyers. That's car buying. But when it comes to Uber and Lyft, it'll be interesting how they play out. Nobody is really taking Uber and Lyft right now. Nobody is leaving home, so they're not taking Uber and Lyft. Uber Eats, I'm not sure how that's going. I can't imagine it going great. So
why not?
I haven't ordered anything. Right? So I haven't ordered anything on Uber Eats. I'm not sure if Uber Eats is making money. Yeah, that's where I stand. Like, but at the same time, you have to remember Uber has a lot of debt as well. What's going to happen at the end of this? Uber's debt, will it be able to pay off its debt payments, or will it just raise more debt to continue its operation? So
yeah, okay. I feel like they are both very secular long-term growth stories with a little bit of pause. And yeah, they have to be strong enough to get through this pause. And hopefully they are, but if they are, then we can, if they can get over it and don't go under, then they will really thrive again. Like things will be back to normal again. And if we get an opportunity, that's a good opportunity. If earlier though, Lyft was considered a better vehicle because it was a pure play, but now given actually that we're saying that delivery will go up, Uber Eats is kind of a good addition to, oh, hey, let's play on the delivery as well as that. So maybe I think it's positively. I know, Panda, how you look at it, but any?
With Uber, what I read was because they don't have too much operation cost, right? It's not like they have the drivers as on their payroll. They don't have to pay any benefits. Didn't they like let go of a lot of people few months ago just because they were trying to streamline the cost? So I know they have a lot of debt, but I don't think with them having any operation cost increasing, that debt is gonna like go up really high. So even if the rides come back, I don't know about Lyft. Like Lyft, I really don't know. Like I never increased any of my holdings on Lyft. I increased a lot on my Uber, but then again, it's a long term. It's like a year or two.
What about the concerns about regulations with them having to insure their contractors and such? Like, are any concerns around that might get some steam and cause issues for them?
At this moment, with everything's going on, I don't know. Like I know they had some issues in California because California wanted them to put the employees as like employees, so that they give benefits. But I thought they were trying to reach a deal somehow, somewhere. But with everything is going on, yeah, go ahead, Sunny.
I was recently in California. There was a 15-minute ride which cost $150. I didn't take it, but it was that high. I asked a friend, and he said that's because of those laws. So I feel like once they have the market share, prices will go up terribly if this regulations come. And Uber will say basically, hey, do you want the whole impact to go on to consumers? The consumers will ask, the government will eventually say, well, we don't want the consumer to suffer so much, we'll take off the regulations. But once they have market share, it's all about market share. If they have market share, they'll pass on the cost because who else is going to take that? Right.
Yeah.
So I feel like they have the market share now, for good or for bad, fortunately or unfortunately, they'll just pass on the cost. Anything else, Stephanie, on this? Okay, anybody else, let me know and unmute and talk. But okay, let's go into the final round of 5 minutes. What is one big thing you're playing on to play the recovery to come out of this positive? So you're betting on this one thing, be like, if this works out, I'm gonna come out of this really positive. I am unfortunately not able to start. I'm not playing on one big thing. I'm like spread across, but I do believe there's an ETF, again, very risky, you shouldn't probably do this, but FNGU, which is 3 times FANG. I think you'll be pretty safe playing FANG as well, but it's a good combination of all the things that are working, be it Facebook, Amazon, Netflix, and Google. So I would put in FANG as an index. That would be my biggest thing. But if you want to leverage it at FNGU. Mo, I think yours is silver, but if it's not, then enlighten me.
It is silver. It is. I am. If I were to do my portfolio allocations, I am about. As of today, I'm at about 38%. We'll increase it to 45%, which is huge. So let's see what happens. Just waiting. My time horizon is about 2 years from today, so we'll see.
What are you watching? Like every day, do you watch news about silver, or how do you track if your thesis is on track or not?
So price tells me everything. I think over the past, few weeks, I've been calling a lot of like the physical metal dealers, and I've been asking them, hey, can you deliver me some bullion? And it is impressive how they all tell you, you have to wait anywhere, and this is the key part, anywhere from 4 weeks to 12 weeks. They don't have it, and they cannot deliver you, and they're not assuring that by in 12 weeks it will come up. So let's see.
So you're taking that for supply? Like how much supply is there? Okay.
How much supply is there, or if anyone is getting it? Like obviously, like this is all to do with the supply chain. There is an issue there, but I feel like it's just going to, because there's so much, so many things working in favor of precious metals and things like that. Silver will come out as a great play in the next 2 years.
Okay, Panda, you go. What is one thing you're betting on?
I'm betting on I'm betting a lot of shorting on volatility. Like I have a lot of puts for VXX, and then I bought a lot of Boeing. But I expect VXX is much more than Boeing. Like eventually it has to come down, and if it doesn't, then well, we all in deep waters, all of us.
Everything is about time and volatility. How long are you going out?
Like I have volatility stuff for like 6 months, then 9 months, then 12 months. I have spread until like mid of 2021.
Wow.
So your risk is spread across. Like if there's a second wave, volatility goes back up again, it will also die down and so on.
Yeah.
Mo, you had a question?
No, I was just saying, like, that's good. So he has a long-term horizon. Like I know people who have very short-term horizon, and it's just crazy how the trading strategies work. So
yeah.
So just,
Stephanie and Mark, what would you bet your house on right now?
So I'm gonna be honest. I had an idea, and then I told Mark, and Mark told me that it was not a good idea.
I didn't say that.
So I'm gonna share my idea. You guys can tell me if it's good or not. But I was gonna say like hygiene products and sanitation. So like coming out of this, or even in it right now, I think people have a lot of fear, and I think that fear is manipulating like their buying practices, and so I think people are buying irrational amounts of soap, hand sanitizer, toilet paper. I think after this, people are going to be afraid that this could happen again, and if there's going to be like a relapse, and 3 months later we experience another type of pandemic of this sort, or another ripple effect or what have you, I think that fear is going to motivate individuals to buy more sanitation products, or be more prepared next time. So that's what I would say is
your point is very well taken. Unfortunately, the stock prices of companies like Clorox reflect that. They have been rising so much, like people are betting on that.
Yeah.
So that's unfortunate that they're all big companies are already up. I would say it's a good time to get into a small business for cleaning. If you provide cleaning services to buildings, to commercial buildings like that, I think they would have increased demand.
Okay.
Yeah. Nishit, we would have loved if you could have joined in to talk more about mortgage REITs. I don't know a lot about them. Maybe you could have told us. That would be great, but maybe next time. Any closing comments from anybody? And also any comments about what we should do next time different than this?
We didn't force Mark to say something.
Come on, Mark.
No, that was great.
Mark, give your predictions.
No, I don't know. I haven't really thought of what to put all my eggs in basket. I don't know.
That's good. Mark doesn't play by the game. He's like, this is the wrong game. You shouldn't put all their bags.
How much time do we have?
I know. I have
1
one
minute.
more thing I have to say.
We have 1 minute. If we disconnect anytime. Any closing comments or any suggestions for the next one?
Subscription boxes and subscription television.
Okay. So,
That's what I have. That's it.
okay. One surprising winner in the last week has been Etsy. People have been buying more on Etsy and Wayfair. That is two things that Wayfair was up 40% today. So it's interesting to look at. Any closing comments, Elisa or Mo or Panda?
All good.
I'm gonna say, be careful. Don't if you're going to play this, if you're going to play the market, have stops in place. Please have some stops in place. Like, don't just be a rogue trader. Try to just common investment management is great, and don't lose everything. I've built some following on Instagram, and I've been talking to a lot of people, and a lot of people have actually don't understand that you have to manage your portfolio very closely. If you're managing your own portfolio, like, have stops in place, because market can turn tomorrow and you lose a sizable amount of your savings or things that you've built over time. You don't want to do that. Just be cautious, have stops, and watch what's happening.
Okay, cool. So hope Nishit can join us on audio next time as well. There's a great people. It's a great spot to come together and hear what everybody else is doing and ask questions. I hope we can see you all next week as well. Same time, same Monday, 6 p.m. Eastern.
Monday, 6 p.m. Eastern. Are
And
you going to send it out in advance?
yeah, I'll send out a link individually to all, and we can probably create a group and post on that as well.
I like the idea.
Collect the questions for next time.